watching and reading the RGL storylines almost exclusively on oil today because it was going to be contango, sell side, backwardation, buy side. And therefore, we didn't think it was going to chop and change. We thought it was going to be a sharp, fast volatility move, either on the buy side or the sell side. Well, we were right. Of course we were right. So there we go. There's the fast volatility move as we'd expected from the RGL. And you can see that that is not chump change by any means, is it? That's not the kind of trade you're looking at and going, not sure how that was visible. Not sure how I could have got into that as a bit of business. Really visible, really easy to spot it as a trade, really easy to execute against it as a trade, really easy to understand it as a trade. And obviously, if we understand it as a trade, life gets a little bit better. When we look at the supply line, demand line, we can recognize a couple of things. First of all, we are way, in relative value terms, way behind the curve, which means that there is a substantial upside on oil, yes or no? What I mean by that is, if I marry the oil price to the supply-demand line, so in other words, what I'm trying to do is bring this to the black line here for the sell. Okay, so that's all I'm doing. I'm bringing this to the black line for the sell, and then I'm trying to get the bottom edge to agree also. So the black line to agree with this one. You can now recognize that the curve on the bond, the oil, is massively discounted to where it should be. The current value, fair value of oil just now is $76.50. $76.50. It's been discounted to that curve all day, ever since the RGL was put in. So because of that discount to the curve, it's been basically buy side only, recognizing the dips, recognizing the buy on dips. There's been a couple of offer opportunities, but recognizing the dips for the macro. And with the macro valuation at $76.50 and it's only at $75.20, you can already recognize that we're running still about $1 plus change shy of the valuation on this at the moment, $1 plus change shy of valuation. We've managed to re-establish a backwardation of 60 cents going out to the middle of next year. 60 cents is better than negative numbers. It's better than contango. And that's all we're looking at. That's all we're looking at, guys. RGLs, looking at the shape, looking at the form, looking at the stories, looking at the narratives, and doing the work. Figuring out based on relative value whether we've got some upside or downside. And it kind of was bearish in here, went bullish here, went very bullish here, went even more bullish here, and it's still very bullish. Doesn't mean we don't get short-term corrections for a sell. It just means that on a macro chart basis, like that bond, on a macro chart basis, bonds are short. We know that the bond price, the 5-year inflation break-evens are bullish. Well, no shit, Sherlock. Guess what? So is oil. Oil's bullish. So 5-year inflation break-evens is going to give us that same storyline, one would imagine, of higher oil prices and higher commodity prices. The inflation is coming back in again, guys. It's coming back in. That's what the big chart showed us on the 10-year stories. That's what we showed you this morning. This chart here has changed direction. The black line is going down, the 2-year swaps. The blue line is going down, the 5-year linkers. And the oil price is going up. Sell-side bonds. Sell-side bonds, higher interest rates. Higher interest rates, higher inflation. Higher inflation, higher oil prices. So that lines up with that storyline. Higher oil prices, higher inflation, higher yields, lower equity prices. That lines up with the shorts that we've been seeing coming into NASDAQ today. So it all ties together, guys. It's not separated. It's all one single point. Classroom starts, guys, in about 5 minutes.
Thank you so much, Ray.